You were listening to chartingwealth.com for Wednesday, the 24th of January, 2018. We have a special training for all of our subscribers today. Inverse ETFs making money when markets crash. Nothing's crashing right now, but we do expect crashes in the future. And the best time to prepare for them is not when they're happening, but now. We want you to understand how to use ETFs when things start to go the wrong way. We're also going to have some other training on options in the future, but right now let's just look at inverse ETFs a little bit. We want you to take this training. There'll be a link in the daily market review. If you're not on our email list, it's easy to get on it. You just go to chartingwealth.com, put in your name, your email address, and we'll send it to you every day. And you'll get this information plus all the other goodies, every chapter of the book as we put it out, and so forth. Let's jump into these markets. What do we see going on? Well, everything is up again for the day. The S&P 500 up 0.21%. We see the derivative oscillator gaining energy, price percent oscillator moving up on the weekly chart, looking nice. We continue to just see stair steps as things move up ever since we had the weekly vertical crossover. You've heard it since the 29th of September. The week ending then just keeps going up with only 2 pullback weeks in the entire time. So far, at least on the weekly chart, this week looks okay. Let's look at the 2-day chart. Price percent oscillator moving up, derivative oscillator losing a little bit of energy, but we see so far the first day of the latest 2-day candle, again peaking right above the Bollinger Band, the volatility bands, and just stair steps all the way up. So far looking okay. We'd like to see the derivative oscillator continuing to gain energy, but it is not. Price movement is, though, well above the weekly and the 2-day trend lines. As we look at the 4-hour chart, what do we see? Well, we see up movement in the morning, and again, up movement in the afternoon. Somewhere it looks like we hit about the same high in the afternoon that we hit in the morning. So a little bit of a sideways slide as shown by the price percent oscillator going sideways, derivative oscillator continuing to gain energy. As we talked about at the end of the program yesterday, we saw the derivative oscillator getting very small, guessing that it would go over to green, which it did in the morning. So that's a good sign for continued movement. And of course, let's check out, well, you know what we did? That's the 4-hour chart. We missed totally. No, we handled the 2-day chart too. We went through both of those. Forgive me, but that's where things are looking. So again, just keep your eye on the 4-hour chart. We want to make sure that when it does roll over and starts moving down, that we notice that and we watch for it in case there is a big drop. Don't know that that is coming in the near future, but at some point there's going to be a pullback on that, and we want to capture as much of the upward gain as we can. Don't want to be greedy, but don't want to be stupid. So that's where we are on the S&P 500. Again, up 0.21%. The Q's up big for the day, 0.83%. It was our biggest up of all 4 of the ETFs that we review. Don't forget we had that weekly vertical crossover going up back on the 5th of January, and we've seen derivative oscillator gaining energy since then. The price percent oscillators gaining upward momentum. In other words, it's hiked up to an even greater angle up so far over the course of this week. Again, just 2 days into the 5-day candle, price movement is above the 2-day and above the weekly trend line. Now, if we look at the 2-day chart, digging a little deeper, what do we see? Still going up nicely. Derivative oscillator gaining energy, price percent oscillator moving up, ever increasing angle. Price movement ended above the Bollinger Band, which is nice. What's up on the 4-hour chart? Well, the 4-hour chart again topped out pretty much in the morning, about the same place as it did in the afternoon. And we see derivative oscillator continuing to gain energy. So again, keep your eye. Hints of any pullback is going to happen first on that 4-hour chart. So keep your eye on it. Okay, back to the 4-hour chart. Let's look at TLT. Now again, it had a weekly vertical crossover going down back on the 5th of January. And we saw 2 weeks of good down movement. This latest week also showing down movement. The price percent oscillator moving down, not at the same steep angle, but the Derivative oscillator gaining downward momentum. Again, up for the day, however, 0.43%. What do we see on the 2-day chart? First day of the latest 2-day. Remember, the prior 2-day candle was down nicely as far as the direction of our weekly vertical crossover goes, but so far, green spinning top really moving sideways up a little bit, well below the big red down candle. It's not priced above that, but the derivative oscillator's lost some of its energy, as has the price percent oscillator. Keep your eye on that. You'll see more on the 4-hour chart. Bump up in the morning with a bit of a pullback in the afternoon. Looks like we're getting close to a crossover going up on that 4-hour chart. So we'll continue to keep our eye on the 20-year bonds after that weekly vertical crossover back on the week ending the 5th of January. But again, we've seen it pop up before, jump down again. So we'll just continue to monitor closely how this TLT down trade is going. Again, up day on Tuesday. We'll see what Wednesday holds for us and if indeed there's a crossover going up. Price percent oscillator is not crossed yet, getting close. Derivative oscillator not crossed yet either. So we'll keep an eye on things. Spinning top at the end of the day. Again, a red spinning top. Indecision tending down. So we'll continue to see what we see. And lastly, we have gold. We had a weekly vertical crossover on gold going up back on the 5th. And of course, gold has since moved up. Not as strongly so far over the course of this week. Derivative oscillators gaining energy. Price percent oscillator moving out the same angle it had in the prior week so far. As we look at the 2-day chart, we can see really more of a sideways slide. Gold having topped off at 127.18 all the way back on Tuesday of last week. That was the 16th. So we see the price percent oscillator angling up, derivative oscillator losing some downward momentum. That's on the 2-day chart. And then we'll jump into that 4-hour chart. What do we see? Not crossed over going up yet, but looks like it's trying to get there, my friends. Again, part of the problem is the oscillator has gotten funky because of all the sideways sliding down movement and such, and it's having a hard time crossing over going up. Derivative oscillators losing that downward momentum. Maybe if we see continued up movement, up strong in the afternoon, we may see things flip over in the morning or perhaps in the afternoon on Wednesday. We'll continue to keep an eye on things. Folks, that's where we are as we end the day on Tuesday, as we go into Wednesday the 24th of January. We so appreciate you being with us. You have questions, problems, concerns, we'd love to hear from you. Hope you're enjoying the training as we put it out every day, making recommendations to you. When you have time, please do add that into your schedule. Make sure you're filling out those daily market worksheets. I think probably tomorrow we'll have a link to our daily market worksheet training that teaches you how to fill out that form and the importance of it. God bless, my friends. All the best from the entire team here at Charting Wealth World Headquarters.